Assalamu alaikum wa rahmatullahi wa barakatuh. I'm Tungumbo and I'm going to talk about our topic is UAE, which is United Arab Emirates. Firstly, it has a well-strong base, good political systems and one among the foremost liberal trade regimes within the Gulf region, as we know is Gulf Cooperation Council economies. Secondly, why we choose UAE? Because we believe that UAE has managed to successfully build its Islamic banking sector into one of the largest in the world. And also we will keep in learning the reasons as to why it has managed to grow its market. Major market size of Islamic banks in the GCC are showing strong profitability last year, but levels are no longer as high as the cost of financing. Moreover, the banking law contains detailed provisions as the role of the UAE Central Bank, which among other things include 1. Issue of currency, 2. Directing the credit, 3. Acting as the government's bank, and several laws will be discussed furthermore.
In the United Arab Emirates, there are various banks located throughout the country that offer Islamic banking services such as takaful and Sharia-compliant loans. Today I'll be sharing you with a list of the biggest banks located in the country. Firstly, we have the National Bank of Abu Dhabi, which is the largest lender bank in the country. It is founded in 1968 in Abu Dhabi with currently plans to move to Al Ariyah Island. Secondly, we have Dubai Islamic Bank, which is founded in 1975 by Sheikh Mohammed bin Al Maktoum. Thirdly, we have Sharjah Islamic Bank, which is first opened in 1975 by Sheikh Sultan bin Mohammed bin Qasim. Next on the list, we have Abu Dhabi Islamic Bank, which is founded in 1988 by Ahmad bin Zayed Al Nahyan. Next on the list, we have Mashriq Al Islam, which is founded in 2006 by Mashriq Group. Lastly, we have Noor Bank, which is founded in 2008, which is really recent, in Dubai. It has a strong presence throughout the country, but is generally found in Abu Dhabi, Dubai, and Al Ain.
Moving on to the trends of Islamic bankings in UAE, starting in 2013, His Highness Sheikh Mohammed bin Rashid Al Maktoum, UAE Vice President and ruler of Dubai, has initiated the capital of the Islamic economy to improve the growth of Sharia-compliant industries. So, without doubt, UAE is a home to some of the largest Islamic banks in the world, such as Dubai Islamic Bank that is founded over 40 years ago. During 2015, UAE government introduced a number of regulatory policies aimed to regulate and organize the sector and implement international standards to put Dubai aligned with international Islamic capital markets such as London and Malaysia. In 2017, UAE Islamic banking assets have risen to $141.5 billion and holds about 7% of global Islamic banking assets. Not just that, UAE has shifted towards becoming a hub for financial innovations. Now, in 2019, UAE is among advanced Islamic finance markets, and according to EY's World Islamic Banking Competitiveness (WIBC) in 2015, the UAE Islamic banking sector is able to achieve $263 billion of Sharia-compliant assets. So, Shaima Hassan, Research and Product Development Manager, Refinitiv, said that Sharia-compliant firms' assets are expected to reach $3.8 trillion by 2023 with Malaysia, Bahrain and UAE as leaders.
Assalamu alaikum wa rahmatullahi wa barakatuh. I'm going to my part is this an illustration of Islamic banking product. First, Ijara is an exchange transaction in which a knowing benefit arising from a specific asset is made available in return for payment, but where ownership of the asset itself is not transferred. Second one, Sukuk, is certificate of equal value, which are evidence of undivided ownership or investment in the asset using Sharia principle and concept endorsed by the Sharia authorities. Mudaraba, a contractual relationship agreed between two parties. One is supplying the capital, The other one is supplying the labor. Last one is istisna, a contract for the sales and manufacture of a particular item. And the manufacturer or the builder is obligated to deliver it to the customer upon completion.
In UAE, there are a few regulatory bodies which governs the banks in UAE. The most important one would be UAE Central Bank, which is responsible for supervising banks. These audits are done once a year and are reasonably extensive. Other than that, there is Abu Dhabi Global Market, which is responsible for the financial services regulatory authorities. In UAE, deposits are not insured in practice, meaning here the government has made an involvement by making sure loss is not incurred by the depositors. The central bank is permitted to issue regulations and protection of deposits and the right of depositors. It is stated under the Article 122 of the new banking law. Value-added taxes, which is VAT, is introduced in UAE on the 1st January of 2018. Its rate is capped low at 5% for most goods and services, and unless it is exempted or zero rated. The establishment of VAT in the UAE has marginally increased the cost of banking for customers. Under the companies law, at least 51% of any company incorporated in the UAE outside free zones must be owned by UAE nationals only, which is why there are very few branches of foreign banks in the UAE. All approvals from the central bank are at its discretion and there are no approximate time frames. However, the approval of central bank would be in a matter of months depending on the identity of the acquirer. It is required to notify the applicant within 20 working days just in case their proposal is rejected by the central bank. Content, the national, and the effective date of the decision must be included.
It is no doubt that people all around the world have accepted Islamic banking and finance, especially in the Middle East and Asia. There is also an increase in demand for Islamic banking, especially in countries like Germany, England, and United States, and etc. However, despite its remarkable acceptance, Islamic banking also faces some challenges and some contemporary issues. Okay, so we all know that conventional banks have a standard regulations that can be followed by banks all around the world. But Islamic banks vary since they needed Islamic scholars to deem it as Sharia compliant. The understanding of scholars also differs from each other depending on their school of thoughts and jurisdictions. Hence, what is deemed acceptable in their country might not be acceptable in other countries. For instance, not all Islamic scholars accept tawarruq or murabaha due to the market price after selling the items, which they consider as riba. Other than that, there is still a lack of experts in Islamic banking and finance. More training and education are required to fully grasp the Sharia understanding and market perspectives towards the industry. Therefore, by producing more Sharia experts and more people with Islamic banking knowledge, it will leave a positive impact towards the growth of the industry.
From our research, we can conclude that the strongest drivers for success of the United Arab Emirates Islamic banking sector is firstly its large domestic demand for Islamic banking services as the population is mostly Muslim. This has allowed banks to flourish as they are able to provide Islamic banking services to the large demand and hence they are allowed to grow. Another reason for the United Arab Emirates Islamic banking sector's growth is their implementation of clear and strong protectionist banking policies that has allowed local banks to flourish while ensuring that its citizens are part of the bank's equity. For all those reasons, that is why the United Arab Emirates Islamic banking services sector has flourished.